My name is David Karlbach. I'm a managing director at the World Trade Center, Utah. And I hope that you know the World Trade Center's mission is to make Utah the crossroads of the world, one company at a time. And it's very important to us that we work in a very commercial, focused sense with Utah small businesses to help them grow through international trade and investment. And today's session is really about the investment side. The fact of the matter is raising capital is critical for companies to grow. And our view is that it's important to start with a broad perspective on all the different ways that companies can raise capital. They can raise capital through grants, non-dilutive grants. They can raise capital through debt, and they can raise capital through equity. And we're fortunate to have a broad network of partners and friends, several of them here today, to just say a few words about the way they can help you. And we're going to hear from different speakers about grants, about debt, and about equity. So without further ado, I'd like to just say a few words about each of the speakers today, and then have them spend time with you. Hopefully, we'll have time for Q&A as well at the end. We're going to first hear from Linda Cabrales. She is the director at the Utah's Governor's Office of Economic Opportunity, Go Utah. And she works with entrepreneurs and researchers to develop and advance innovative technologies that support businesses throughout the state. They have an excellent service offering to help companies who are looking for non-dilutive grants from the federal government, TTR and SBIR grants. And they can really help you get your application in and significantly increase your chances of success. So so maybe on that, I'll just turn it over to you, Linda, and hear from you. Thank you very much.
Hey, thank you, David, and I appreciate the opportunity to be here. And I just want to say the great work that World Trade Center Utah does for our community, and I'm excited to be part of this today. So I think Rayanne's going to share my slides. So as David mentioned, I'm the director of the Utah Innovation Center. And what we do here is we support technology innovation within the state of Utah. And we do this in a lot of ways, but I would say the biggest way we do this is through the SBIR, STTR services. And if those aren't terms you're familiar with, I'm going to define those for you in just a minute. But we help Utah companies. We've been in this for quite a while. We've been around for about 14 years, I believe. I've been participating with this program for about 8 years. And we just work with a lot of companies. We have a good success rate working with a lot of different companies. So the national win rate for these grants and contracts are between 14 and 17%, and we're better than 25%. So we do understand the process. We can help Utah businesses with the application process. We'll mentor you. We'll help you from even if you need to know specifics on how to even begin, we can help you with that. And we also work very well with all of the partners throughout the state to make sure you have the resources that you need. We've helped bring with 2 Utah companies $50 million through these programs. And also we're a proud recipient of the Tibbetts Award. So Roland Tibbetts was with the National Science Foundation in the early 80s. And he had quite an illustrious career. And he came over to the National Science Foundation and said, I'm only going to do this for 1 year. And he ended up staying for another 20 years. He saw all of the money, the research money that was going to universities and national labs. And he felt like small businesses should also have a part of this. And so he's the one that started these programs. So next slide. So this is $4 billion annually that goes to small businesses. So it's a very competitive process. And the 2 programs there, the Small Business Innovation Research, or SBIR, is where any agency, a federal agency, has an extramural research budget over $100 million, is required to set aside 3.2%. For the Small Business Technology Transfer Program, or STTR, this is a little under 0.5% of any agency that has an extramural research budget over $1 billion. And so in the early 80s, the SBIR program began under Roland Tibbetts. And then 10 years later, the STTR program came about. And what they found is that there are so much great research going on at our universities, but oftentimes that researcher, that professor will do the work and then it turns on, it works, and then they put it back on the shelf and start something else. So the intent of this program, STTR, was to help transfer that technology out to small businesses because they're the ones who are going to commercialize the product. Next slide. So the best benefit of these dollars is that they don't take any equity. So you don't lose technology ownership, you don't lose IP, you do not have to pay back the funds. The one caveat is on that second bullet, you can see national emergency. The only instance in the 40 years that these programs have been running are with night vision goggles. There was a reason for our national security that we needed night vision goggles. So that was used and then eventually licensed back to the company. But those are all things that you agree to in the terms, and we only know of that one instance. Next slide. So these are the 11 agencies that participate in the program. So Department of Agriculture, we know as USDA, the Department of Commerce, NIST and NOAA, so Standards and Technology in Oceans and Atmosphere. Department of Defense, which is the largest group that participates. Education, Energy, Health and Human Services. The largest agency within Health and Human Services is National Institutes of Health. Homeland Security, Transportation, the EPA, NASA, and the National Science Foundation. You can see those that are bolded are the 5 big ones. So they participate in SBIR and STTR. Next slide. So these fund high-risk projects, early stage. And in the early days, this is what they said, that they're important or critical inventions and innovations that may not be considered by other types of venture funding. And so when you look at that and say, okay, what kinds of things would they back? And so some examples there are the GPS system, the Qualcomm chip, and there was also a flying car that DARPA had put out a topic for a number of years. And now you've probably seen there's actually a flying car that many people are doing now. And they also asked for a Better Life Vest. So you think a Better Life Vest, that doesn't sound like that would be maybe a high risk project, but because they were looking at the number of people who drown, that they felt like, we need a better solution. So Health and Human Services had a topic for 3 years in a row. And if you think of your cell phone or your iPhone, 80% of the components in an iPhone have been, developed under these programs, SBIR and STTR. So it's a pretty remarkable program. Next slide. So there are 3 phases basically. So a phase 1, you go and put that application in, and this is basically where you're proving feasibility. So it's generally a 6-month project for about $200,000. This range, it differs depending on which component or which department you're looking at. You're exploring the technical merit or feasibility of your idea. In a phase 2, this is where you're continuing that research. So you continue research and development. These are 2-year projects, and they're around $750,000 to $1.5 million. And the biggest deal with phase 2 is that you need to show that you have commercial potential. Many of the agencies even require a commercial plan that you put into place. So that's 40% of the win. And this is where we say with phase 3, this is where innovation moves into the marketplace. This is where you find other types of funding, private sector. There are some of the agencies who offer contracts and they will actually become your customer. Department of Defense often looks for a very specific solution and they will oftentimes be your customer in a phase 3. Next slide. So with commercialization, you have to demonstrate that you understand the market, you understand your competition, that you have partners in place, and then you have a chance to provide letters of support. And in a phase 2, so if you'll continue, you have to actually have the commercialization plan. As I mentioned, whether you're going to license or manufacture, and again, 40% of the winning is commercialization. Next slide. So this is how the money can be spent. So this is the project is about paying the salaries of those individuals who work on the project. That can include fringe benefits. You can replace supplies, lease equipment. They really don't want you to buy equipment in a phase one. You have a reasonable overhead rate that you can claim, and you can pay for consultants or a sub-award. And then there's the fee or profit, which is amazing. That 7% is what it can be. Some of the agencies for a phase two will go up to 10%, but that's money you can use for anything. So if you'll go on. So this is what you can't do. So you can't pay for lawyers or patents or marketing. They expect you to be a business already, so they're not going to pay for computers or to construct a building or to create a lab. And travel is just in some instances. But there's a new program that they have now called Technical and Business Assistance, or TABA, that they will provide a little bit of funding that you could use for the lawyers or patents or marketing. And then your fee or profit you can use for anything. Next slide. There's just a couple of opportunities I wanted to let this group know about. We're excited in our office that we just released or launched the Utah Technology Innovation Funding Pilot. We have to have an acronym, so it's called UTIF. This is where companies can leverage the opportunities within the SBIR and STTR program. So if you're new to this and it takes about 200 hours to put together a good competitive phase one application, you can apply for a microgrant that will help offset some of those costs. And we also have non-recourse loans available for those companies who've won a phase one, and then they're preparing a phase two proposal. Once they submit that, we have a non-recourse loan option that we can provide as well. Next slide. We also offer training, and all of our services are free to Utah companies. Occasionally, we might have a small cost for maybe a workshop when they used to be in person, but we're not seeing those these days. But we're offering a workshop for USDA and also NSF that's coming up. And this is to help companies who might be interested to apply for these opportunities. The interesting thing with USDA, I mean, it's things like farms and forests and water, but they also have a topic that has to do with rural America. So they're looking for any kind of a project that will impact rural America, and they will fund that. And so that opens it up to what you might traditionally think with USDA. And I think next slide is the end. If you have any questions, I'm happy to answer them, and you can contact me directly. Thank you so much for this opportunity, David and Rayanne.
Great. That was super informative, Linda. Thank you very much. And I saw a question about sharing the slides. We will endeavor to get all these slides out to the participants today. Thank you again, Linda. All right, next we wanted to hear from one of two speakers from the Small Business Administration. We're going to first hear from Patty Brewer. She is an export finance manager in the Export Assistance Center in Denver, part of the regional team, the excellent regional team covering Utah. And she works with export finance managers around the country to help small businesses get ready for or grow their export, get ready for and grow their exports. So Patty, floor is yours.
Thank you. Thank you so much, David. And thank you to the World Trade Center for organizing this wonderful event and for inviting me to participate. So yes, I'm an export finance manager with the Small Business Administration's Office of International Trade. And my job is twofold. One, to help exporters locate good lending sources, whether that's through the SBA or other sources, and also to connect you with subject matter experts. And so, much of my conversation today is going to focus on lending, and I'm going to throw out a lot of information, but feel free to call me afterwards or email me, and I'm happy to talk to you one-on-one to answer any of your questions. And I did also want to say, Linda, I loved your presentation. That's amazing information that you presented. Thank you so much. And I look forward to working with you. So we can go ahead and start the slides. And there we go. The first slide, export loan programs. We'll go straight to the second slide, and I'll talk a little bit about the State Trade Expansion Grant. So it's also known as STEP, and STEP is partially funded by the Small Business Administration, and it's administered in Utah by the World Trade Center Utah. And so you can use the STEP funds if you are a new exporter or you are an experienced exporter pivoting to a new market. So the STEP grants offset some of your market development costs, like if you're attending a trade show, or if you are translating your website, or you've got to repackage your product for the foreign market, or you might even want to invest in some patent and trademark protection, and the STEP grant can also help you pay for that. Now in Utah, it's a $15,000 grant that you can apply for annually. So you can apply for it in 2021 and then again in 2022, as long as you're using it to offset some of these export market development costs. Now, one thing I do know is that, for example, if you're planning on attending a trade show and you want to apply for STEP funds, you want to apply about a month or two prior to the trade show, because you have to request the funds before you expend the funds. So that's it for STEP, and we'll move on to SBA now. Okay, so SBA, we run on our rules and regulations and our guidelines. So what is a small business? Small business is any company with $15 million in tangible net worth and an average net income of less than $5 million. So we also support, in terms of exports, you can be a good or a service. So I've worked with software developers. I've worked with engineering and consulting firms. They are eligible exporters. There is also direct and indirect exporters. So a direct exporter is exactly what you might think. A direct exporter would sell their product directly to their foreign buyer. And then you might have an indirect exporter, and that's a company that sells their product to a US company, and the US company incorporates their product and ships it to an overseas buyer. And so, for example, let's say I'm a company and I manufacture brake pads, and I sell my brake pads to John Deere. John Deere incorporates those brake pads into their tractors and sells those tractors overseas. Me, as the brake pad manufacturer, I am an indirect exporter, and I'm eligible for SBA's export finance programs. So here we see the export guarantee guidelines. And so this is a nice laundry list of the really important guidelines you need to follow. The most important of these is bullet number 2. No US content is required, but you must ship from the US. So as long as you're shipping from the US, you can request support from the Small Business Administration's export financing. Now, I work with companies who manufacture goods overseas in China or Taiwan, and they ship those goods directly to their foreign buyers from those foreign manufacturing locations. Those are drop shipments, and those are not eligible to be covered under the export loan programs. However, the SBA has a big variety of loan programs, and there are other programs that the drop shipments can be covered under, like the Capline program. So whether you're shipping from the US or you're shipping overseas, whether you're shipping a good or a service, give me a call. Let's see if there's a program within SBA that can help you. Next slide, please. So the SBA's loan programs, very similar to the regular 7A domestic loan programs. It can either cover your working capital or your term financing. So if you're looking to expand your supply lines, hire employees, cover those day-to-day costs, then you'd be looking at your working capital. If you're looking to buy equipment or buy real estate, then you'd be looking at term financing. So let's go to the next slide, please. Thank you. So there are 3 loan programs within the export financing portfolio. The first one is Export Express, and that's really designed for new exporters, or it's designed to help you cover some export development costs. The next one is the Export Working Capital, and that collateralizes either your foreign purchase orders or your foreign accounts receivable. And then the final one is the International Trade Loan, which helps you as an exporter expand your capacity. So we'll talk about each in turn. Next slide, please. So the Export Express is the smallest of the loan programs, and it's typically the easiest to use. It's got a lending limit of $500,000, and a lender who's involved in the Export Express has been given authority from the Small Business Administration to approve Export Express transactions. And so there's a question that just popped up. How do we know if we should go to the SBA or to EXIM? One of the primary ways you can think about that is if you have less than 51% US content, if you're manufacturing a product and you have less than 51% US content, then you want to come to SBA because Ex-Im Bank mandates 51% US content. But sometimes you can use SBA and Ex-Im Bank together. And I can go into those specifics in a bit, but very often I've worked with companies and they will have an SBA, they'll have an SBA loan, and they'll also insure their accounts receivables through Ex-Im Bank. So it's very possible to work with both at the same time. So going back to the Export Express, again, the lenders have authority to approve this transaction. So it's a very fast turnaround. The lender decides yay or nay on the transaction, and they inform the Small Business Administration. And you can use the Export Express either as working capital, or you can set it up as a term loan. And one of the really nice things about the Export Express is you can support standby letters of credit. So let's say, for example, you go to your foreign buyer and you're going to mandate 100% payment upfront. And your foreign buyer says, sure, I'll pay you, but I want you to set up a performance bond. So typically when you go to your lender to set up performance bond standby letters of credit, your lender requires you 100% cash collateral. Now, if you put that performance bond under the Export Express, you are only required a 25% cash collateral. That means that 75% of that advance payment you can plow back into your company. Next slide, please. The next one is the Export Working Capital Program. And this program collateralizes your foreign accounts receivables and your foreign purchase orders. And this one, so lots of lenders don't like to include foreign purchase orders or foreign accounts receivables in your borrowing base. So typically you can't use these as collateral, but if you use the EWCP, you can. So essentially what you would do is set up a line of credit with your lender. It can be as short as 2 months to support a single purchase from a large foreign buyer, or you can set it up for up to 3 years to support recurring and multiple purchases from groups of buyers. So you'll set up a line of credit and then you sell to your foreign buyer. Say you're selling to an Australian buyer and your terms are 60 days from shipment. Your buyer is going to pay you 60 days after the goods have shipped. So you take that account receivable to your lender and your lender will advance you 80% of the value of that account receivable. 60 days later, your Australian buyer pays you and you pay down that line of credit and you start all over with another account receivable. The other nice thing about the Export Working Capital is it also supports standby letters of credit. Next slide, please. And the final loan program is the International Trade Loan. So if you're a small business exporter and you've maxed capacity, so you've got so much demand, you don't have enough capacity to produce anymore, the International Trade Loan is what you can use to help you improve your production capacity. So if you need to retool your shop, add warehouse space, or set up new supply lines, hire more people, you can use the International Trade Loan to help you do that, to help you increase your production capacity. And I see a question about the EWCP program, the Export Working Capital. Your accounts receivables are not required to be insured. You get an 80% advance rate if your accounts receivables are not insured. If your accounts receivables are insured by either Ex-Im Bank or another, like say Euler Hermes, then you can get a higher advance rate up to 90%. So it's a better, if you're taking care of your accounts receivables and you're insuring them, then you can get a higher advance rate. Back to the International Trade Loan. You can set it up as either a working capital transaction or as a term loan, depending on what you use the funds for. And some lenders who are preferred lenders can also do the International Trade Loan under their own authority if they are PLP lenders. So next slide, please. And that's it for me, short and sweet. Happy to answer more questions. You can either ask me here during this webinar, or you can call me or email me. I'm always around. Thank you again to David for setting this up. It's been fun.
Great. Well, thank you very much, Patty. Also very informative. And I can imagine these final pages, the one that we just lost, to be the most important, because it's great to know that there are experts in our network, in everyone's network here, who can help and who are so accessible. So please, as Patty said, feel free to reach out if you have follow-up questions. All right, we're going to hear next from Don, also with the SBA. Don, you are sorry, I have to look at my notes. You are a lender relations specialist responsible for marketing the lending program and services here. And you do work with small businesses and lenders in Utah to help with these programs. So just want to give you a chance to introduce yourself, and floor is yours to add to anything that Patty said. Thank you.
All right, great. Well, thank you very much. Thank you for your time. Thank you for having me. Like you said, David, I'm Don MacMillan. I'm a lender relations specialist at SBA here in Salt Lake. I'm responsible for marketing SBA lending programs and services to our existing lender network of banks and credit unions in Utah, as well as recruiting new lenders to participate in the loan programs. I'm actively supporting the payroll protection program, the economic injury disaster loan program, and other COVID relief programs. I also assist small businesses and lenders in Utah with export loan programs and speak weekly with Patty Brewer to ensure we are supporting Utah businesses and answering questions. So feel free to talk to myself or Patty with any questions or concerns you may have. I do have one slide deck that I was going to show. The second slide basically is just I wanted to highlight that there's a link there to the SBA website. So Patty talked a lot about the programs. SBA has a very deep website, lots of information that you can access. It's very transparent. It has both the information for businesses and training as well as for our lenders. So it's very transparent, and it's being updated on a weekly basis, actually. However, the website's a little bit, it's deep and it's overwhelming. So what we have there in our briefing is a landing page for the Utah District Office. And on that web page, you have some of the success stories, upcoming events, and there's also a link to a PDF resource guide specific to Utah, as well as there's a link to our Utah International Operations Team pipeline document, which we just finished. It's a terrific document. It highlights how our Utah partners can help you through each stage of the export process, which is a long process, but we want to chop it down to chunks to make it very transparent and usable, and highlight different partners that can help you along the way. The pipeline document is a living document, so as products become available, we'll update it, and any new export support or processes are available, we can publish that. Yeah, on this slide, this is just our basic high-level overview of what SBA is doing right now. I'll start at the very top where it says capital counseling, disaster relief, and contracting. On counseling, Utah has SBA funds counseling, and in Utah we have 13 small business development centers, 2 women's business centers, SCORE, which are mentors and retired executives. We have a Veterans Business Development Resource Center, and we also have other agencies that work with you and where you can obtain some help to get your business started. We partner with other government agencies and the World Trade Center, who, like Patty mentioned, manage the STEP Trade Expansion Grant program, to help Utah small businesses enter and expand into dynamic global markets. For example, if you're starting out, the SCORE website is a terrific website for templates for your balance sheet, P&L statements, cash flow, and even business plans. So I haven't found a better website to access those types of templates. So those are things that can get you started. Once you complete those, you can make an appointment with the World Trade Center or the Small Business Development Center to tighten up your marketing strategy, refine your financial pro formas, and hammer out your export plan. Those are things that you'll need right out of the gate, and you can contact Patty or myself to help review those export plans. The second piece, which is in the front there, is the capital component. And that's what we're talking about today. And my job is to work with the lenders to provide them the latest capital access guidance. So the SBA has several loan programs, which are for the working capital, real estate, machinery, refinancing. Early in the process, what I like to do is when we start talking about capital, I like to get you to start thinking about which lender and what lenders right for you. Utah has over 600 lenders that are active throughout the state, but only 49 are active in SBA lending programs. And like Patty mentioned, the preferred lenders have a little more capability, time-wise and experience, and we have 19 preferred lenders in Utah. And as a business owner, you want to make sure you're working with the right lender that has the experience, training, time, and help to help you, as well as the history with working with export businesses. The third part of this slide up top is the disaster relief. This is a loan program that's still available. It's helping businesses recover. It just recently got increased to a maximum of $2 million and can be used to cover business expenses during this recovery phase. It's a term loan with 3.75% interest for 30 years, no P&I for 24 months. So that's a really good product that's out there right now, helping businesses recover. And you can go on the SBA website to apply for that. The last piece is contracting. We manage a portfolio of certified 8A small businesses that obtain government contracts. We're not going to talk about that, but if you're interested, you can contact me. And the rest of the slide highlights what SBA is doing. It's really evolving. These are the latest updates that SBA's put forth. They're trying to be customer centric. We're trying to make updates on a weekly basis to our programs. And like I mentioned, the website's constantly updated. So we're trying to evolve to better meet the business needs. Thank you.
All right, great. Don, okay, thank you very much, Don. Again, great to know that, there's a strong partner here and you here in the state and really trying to bring those federal programs down to the state level and make them accessible to everyone. So great to have you here. Thank you, Don. We're gonna pivot now, both from the public sector to the private sector and from debt. We've talked about debt and grants. We're going to talk about equity a little bit. I'd like to introduce Tara Spalding. She's a managing director at Boom Startup Accelerator, one of the oldest accelerators actually in the country. They are nationwide, in fact, global in terms of the portfolio that they support. Boom Startup is an accelerator and mentor-driven angel investment program. And so they offer not just capital, but also help, similar to what we've heard, advice and guidance and support in many ways to help you succeed. If you succeed, they succeed, given that there's an equity exchange here. So without further comment, I'll turn it over, Tara, to you. The floor is yours.
Well, thank you, David, for including me. And it's an honor to be on this World Trade Center conversation about accessing capital for international growth. A little bit about my personal history. I'm a serial entrepreneur. I started and was in the starting group of several software startups from Silicon Valley before I created an incubator 9 years ago, and I became the managing director at Boom Startup Accelerator, which is actually based here in Salt Lake City, Utah. However, as David mentioned, services entrepreneurs as well as angel investors from around the world. And in fact, this year we're on clip to help out and work with over 1,000 founders. So it's really exciting. And thanks to the internet and COVID, we do a lot of this online event and participation. So if we could share my slides, before talking a little bit about, Boom Startup, I love to go to the next slide and give a little framework for capital accessibility, especially for those who are in the audience that are at a very early stage. You've heard today a lot of what we call non-dilutive funds, which are oftentimes grants. And then there are dilutive funds, which in fact Boom Startup Accelerator focuses upon, but there's also, as David just mentioned, the whole debt perspective. I am often asked by people who are venturing into entrepreneurship for the first time, well, what kind of capital is accessible to me? And first off, if you're in the early stages, grants as well as pitch competitions are a really good resource. And David and I, in fact, were judges on a pitch competition for Rev Road, a fellow accelerator based in Provo, this past Saturday, where the winner won $10,000. And David, you awarded $5,000, correct? Yeah. So pitch competitions are also a great non-dilutive resource. As you're starting to get traction, but you're still in the low profitability, you'll hear the terms of SAFE agreement and convertible notes, which means that it's a debt that converts into equity or basically ownership of your company. That's where Boom Startup really focuses on. And then after you get that first round of investment, which is oftentimes, between, 50,000, maybe it goes up to $500,000, and you prove out that sort of worth, that's when you can do follow-on investment rounds, furthering giving up equity for ownership of your company to get that inbound cash to help you accelerate your growth as well as your profitability. Next slide, please. Funding complications as an entrepreneur, and I know this personally, is not only running your business, but it's also running the terms and the agreements for the equity that you're giving up for that cash coming in. And let me tell you, our program, Boom Startup Accelerator, really focuses on educating and providing this sort of insight for entrepreneurs, and things such as term sheets, how much equity are you giving up for that cash, your cap table, who specifically owns what percentage of your company. And then understanding who's investing into your company are very important aspects, because any of these that are misguided or missteps can put you at a disadvantage and literally shut down your company, even if it is a fantastic product and a great team. And so if we can go to the next slide, Boom Startup is an online and open and opt-in accelerator. David mentioned that we're one of the oldest, and that's very true. Post-COVID, I got to rewrite the chapter, and we've simplified things where we have 4 specific programs. Pitch competition is called Pitch Up. We just hosted this a few weeks ago, and we do these a couple times a year. And that's where we give away cash awards as well as services to bolster companies. We have open up workshops. And let me tell you, these things are fabulous. Oftentimes they are free. All you have to do is sign up, and we give you insights and tools and connections with experts to help get your company going. Rise Up are online in-depth workshops that run over the course of the week between like an hour and a half for 3-day meetings, where you work with an expert and a small group of startup founders and solve a specific business problem. Case in point, like building a credible investment ask, or how do I make a 3-minute conversational pitch to investors, or how do I leverage digital marketing to get some more traction. These topics are fantastic, and it's a great way to figure out the guidelines of doing it yourself before you want to hire a consultant. And then last bit is Amplify Up, and I'm going to spend more time on this program, but overall, this is how we fund startups. Next slide, please. We deliver success because we're all funding oriented, and we're also tracking the startup's business growth on a quarterly approach. We ask our 1,000 founders that are working with us to give us an update every 90 days across 12 different aspects of their business. And then we make suggestions as to what they need to pay attention to next, and provide access to resources and mentors and programs such as those before to help them out. Next slide, please. Amplify Up is our funding program, and I know that's what most people are interested in. This is a very unique program compared to other accelerators. It's because we can provide up to 100,000 United States dollars in funding. And how we do this is by leveraging our parent companies, which is Assure SPVs. SPVs stands for Special Purpose Vehicles. And special purpose vehicles are a great instrument for those early stage investments, like for convertible notes and safe agreements. The reason why is you can collect a lot more smaller checks and pull it into an SPV, which then becomes a single entry onto your cap table instead of having several entries for every single person that writes a check. When you ask for smaller check sizes, and especially when you're still at a very high risk stage, especially early in your company's life, when there's a lot of stuff still unproven and unknown, it's easier to get the checks. And so us as Boom Startup leverage this SPV as well as our investment community to basically vet your investment opportunity. We give you the sort of grooming. We help build your credible investment ask, and then we collect the small checks and roll it up for you. We also do demo days. We have one coming up next month. These are, just basically our kickoff rounds for the Amplify Up. Next slide, please. I'm often asked, what are SPVs and why is this disruptive from other accelerator models? First off, other accelerators are often managed and funded by funds. So they have private LPs that invest into the accelerator itself and trust the decision-making that the accelerator does. And that's fantastic, but it's a very high barrier of entry from the entrepreneur side to go into the accelerator. Yet SPVs allow us to make our personal investment, but then open and include early stage investors, such as angel investors, into your fund and still not negatively affect your cap table with additional roles. And so this is just one of the new instruments that make investing a lot more fasting as well as more democratic. Next slide, please. Boom Startup offers 3 different funding paths. If you come to the website or connect with me through LinkedIn, I'm happy to explain this. We have a syndication program, an administrative program, and also we do a hybrid and blend of both, depending on if you have angel investors that are coming to the table as well as us. And so this is all very, very exciting. Last slide, and this is how I would love to end, which is our promise. And if you join our community, which is very simple, you participate in the event, you do the quarterly business survey updates, and we're going to connect with you and guide you with care and encouragement so that you can succeed. And we thank you so much.
Excellent. Again, thank you very much, Tara. That was super informative and complimentary to the others. And I hopefully the message is coming through of your need to raise capital is going to be the right answer to raise capital is going to be situational. And depending where you are, it may be appropriate to seek grants, it may be appropriate to seek debt or seek equity or convertible notes, as Tara just clarified. Thank you very much. We want to turn now to another private sector participant, John Stillwagon from Tradewind. He's going to talk to us about their services in the area of trade finance. And John is the CEO of the Americas for Tradewind. He has been with Tradewind since 2012, has a wealth of experience, and we're looking forward to hearing from him. So John, floor is yours.
Great, David. Thank you so much. And thanks World Trade Center organization for putting on the event and inviting me to speak to the group a little bit. Appreciate the opportunity. I'm going to be relatively brief, I think, and mostly just a verbal presentation here. If Rayanne, if you have the PowerPoint, we could put that up, but otherwise we can share that afterwards with the group. So yeah, maybe just, on the second page there. But again, basically I'll just introduce myself and the company to you guys and tell you a little bit about what we do. So we're going to be talking more about trade finance, so debt. So going back to the debt side, not the fund equity side, but I guess all things are probably of interest to the entrepreneurs in the group. So, okay, a bit about Tradewind. We were founded 20 years ago, or I guess almost 21 years ago now. Private sector company founded by 2 partners. One of them is retired, so we have a single shareholder at this point. We're founded in Germany. We remain headquartered in Germany. And basically the origins of the company, we were financing mostly textiles, actually, to begin with, the textile trade from Turkey to Germany. So, you have these factories, and you can picture these factories in the country of Turkey who have, they're getting orders, they have machinery, they have workers, they have raw materials, but they need cash flow. And the banking system wasn't that great in that country. So we stepped in and said, okay, look, we can provide trade finance here, particularly what's called factoring or purchasing of receivables. And so when these factories, when these manufacturers would sell their product, we would advance the money to them, against that shipment, and we would wait until their customers paid at a later date. So it's a pretty simple concept. The devil's in the details, particularly internationally. So anyway, that's how we started. Over these 20 years, we've grown. We're about 250. I think the presentation's a bit out of date. We're about 250 people, and we've spread geographically too. So we're pretty international. We have offices in East Asia and South Asia, Middle East and Europe, and then here in the Americas. So we're basically divided into 3 global regions. I run the Americas group. Like David said, I've been with the company for about 10 years. We have our office, or Americas headquarters, if you will, in New York. So that's where I'm based. But we have some people across the US and then also in South America. So what do we do? Recapping. I mean, I'd say in about half the cases we're our clients' only or primary financial partner, financier, and in the other half the cases, our clients work with a bank or banks or other non-bank finance companies along with Tradewind. And again, what we're offering is this thing called trade finance, which is like an umbrella term or a generic term that people use to mean different things in different cases. Majority of what we do is that thing called factoring. So basically our clients make a sale, they're waiting to get paid, and we advance the money to our client, and then we collect at a later time from their customer. So the obvious benefits there are our client, has improved cash flow, so they can take that advanced money from us and reinvest that into payroll or new raw materials to make more product or buy more product if they're a trading company. That also gives their customer, more flexibility to pay later. So we finance these receivables, whether they're on 30-day terms, 45, 60, 90, even up to 120 or 150 in some cases. And so, this becomes like a selling tool for our client to go to their customers and say, okay, I have, I can sell you white t-shirts. That other company can sell you white t-shirts. Here's my price, but I can also compete on terms, right? So it's just another way to, for our clients to offer, this benefit of more flexible terms to their customers without impacting their own cash flow. So it's a cash flow tool. We also use, I think the folks at SBA mentioned earlier, this company called Euler, which is a credit insurance company. We partner with Euler. We've been with them for, I think, the whole time for 20 years or so. And what we use that insurance to do is insure this receivable. And what that means is we're insuring against the risk that our client's customer can't pay, right? So our client says, okay, I'm going to, sell product on 90-day terms to this customer. What if during that 90-day period, something happens and that customer is unable to pay, whether it's a large retailer or an industrial company or a small, trading company, private sector, SME. So we have that insurance backing us, and that gives our client, both more confidence in selling to this customer, and ultimately, gives them the protection that if there's a financial default, we don't have to go and recoup that money from our client. We have a reliance on the insurance company. So again, the first benefit's like that this is a cash flow solution or cash flow improvement. The second benefit of what we do is that we're insuring these receivables, so it's like a risk mitigation solution. And then how we work is also we're collecting the payment from our client's customer. And so we're doing what's called, the cash application, closing out the invoices and doing the reporting around that. So we're basically like an extension of our client's receivables or back office department, where we're acting as, their back office. So we work with, domestic companies. We could work with a company in Utah selling to Arizona. We could also work with a company in Utah or basically most places in the world selling to other places in the world. So I think, especially on the international side, this can be of interest for US companies. For instance, if let's say you go to a trade show and you meet a company from Sweden or something that says, yeah, I love your product, I'd like to order it. Can you sell it to me and I'll pay 30 days after arrival? For a typical small mid-market US company, they might say, I don't really know that much about Sweden. I don't really know much about this company. Maybe I'd like to get payment in advance instead of offering open account terms to my customer. And, whereas if they're working with us, they could say, hey, Tradewind, what do you guys know about this company in Sweden? We would do our diligence on them. We would say, actually, yeah, they're a well-known company. We can put our money where our mouth is. We can approve a, $200,000 limit, or, we'll try to get whatever our client needs. And then again, our client makes a shipment, we advance money to our client, and they're off to the races. So that factoring product, that purchasing of receivables or discounting of receivables, that's the main thing we do. But we have other trade finance techniques like opening up letters of credit, or even supporting inventories or inventory in transit. So we don't do bank stuff like checking accounts. We don't do term loans. We don't offer equity. But this is another tool that small and growing companies can use, potentially as an alternative to equity until they have a valuation that's good, or as an alternative to a bank loan, where a bank might say, yeah, we can make a loan to you, but for only 500,000, whereas our client might need $1 million. So we're not the right fit, for all situations. Certainly, early stage equity is great if the company needs to invest into marketing or IP or really growing the business. And the SBA offers a lot of great products, EXIM as well. So we think of ourselves as a complement, an alternative and a complement to those other types of financings. I saw a couple questions pop up. So should I answer those now, guys, or should we wait till the end?
Yeah, if you could, in a minute or so. I'd like to leave a little time for Jim. But yeah, why don't you take those, John?
All right, great. So yeah, just see two questions here. One from Marcus. So what's the typical cost? So yes, definitely a popular question. My joke is between 0 and 100%. My joke is if you walk into a car dealership and you want a Honda or a Ferrari, two different price points. Generally though, our financing is going to be a bit more expensive than a bank, but we're typically lower than I'd say most non-bank trade finance or factoring companies, because we have relatively large business and we borrow mostly out of Europe. So we have our own capital, but we leverage that with European banks. So if you're talking about just the cost of funds, like the financing, we're typically in like the 4, 5, 6% annualized range. But there's a fee because we're including credit insurance, what I was talking about before, like this Euler receivables insurance, and because we're doing the work of doing the cash application and the other factoring work, which adds a couple more percent. So all in, typically you're talking about like mid to high single digits up into the mid double digit, mid teens, let's say. We typically advance like 70 to 80, 90% of a receivable. Okay, and just very quickly, I think I'm down to my last minute here. What criteria do you use when choosing receivables insurer, Euler versus EXIM and so on? So we have a partnership and a policy with Euler. That's our main carrier. The benefit of a company like Euler is that they have a big database of privately held companies, which it's hard to get information on them. EXIM is great too. I've worked with EXIM in the past. I think particularly for maybe medium or higher risk countries, EXIM is more likely to insure those than the private sector insurers. And also EXIM, as far as I know, is more willing and able to insure a single shipment or shipment by shipment, whereas we or people that are participating with these private sector credit insurers are looking more for like what's called whole turnover or all sales going to these particular customers. So I'll leave it with that. Again, appreciate the opportunity to speak to everyone, and we look forward to being in touch. If you have any needs that aren't being met, with your banks, and you have receivables that can be leveraged, particularly internationally, but even domestic, we'd be happy to speak with you. And I guess I'll turn it back to you, David. Thanks again for the opportunity.
Yep. As with the others, John, thank you. Very informative and nice to see that you're here and available and that your service offering is complementary to the others.
Thank you.
So I'd like to now turn it over to Jim. Jim, you can take us home. Use as much of the rest of the time as you like. Many of you may know Jim. He's been with the World Trade Center for years. He is the Director of Business Outreach and Community Engagement, specifically for Northern Utah, but wants to help all small businesses in Utah. And Jim, I'll turn the floor over to you.
Hey, thanks, David. I appreciate that. I love the partners that are on the call today. Many of you I've worked with for years now, and it's great to see all your faces. Before I talk about what to do with all this fantastic financing that you now have access to, I want to point out really quickly just the power of John's solutions there. If you're selling to clients in countries, particularly countries where interest rates are high, you can provide really fantastic financing solutions for your clients through trade credit insurance and through the kinds of solutions John is offering. Being able to sell those receivables is a way you can actually generate some profit if you want to get to the 2.0 discussion on how trade finance can work. And so John's services in particular are really fascinating for those who want to take a deeper dive into how trade finance can become a profit center for your company. In any case, I say that because it's really fantastic topic, trade finances. As you figure out, okay, I've got this amazing capital behind me. I can grow my business. I know that I have opportunities to get grant funding, to get research funding, startup funding, or others through these vehicles. I'm here to cap this presentation by telling you, maybe suggesting to you how it is you ought to use that financing to grow overseas. Here at World Trade Center Utah, many of you who've known us for years know that we have capabilities, a number of capabilities to help you grow, from STEP grants, which you heard about today, to the excursions that we organize to various countries in the world around governor-led trade missions, or various trade shows that happen every year, or at least they were happening prior to COVID and will hopefully be happening again here in the near future. What many people don't know is a little bit newer here. We've opened up a division of World Trade Center Utah that offers premium services beyond what we could offer before. This division is called Global Business Services, and the value of having Global Business Services is that as a client, you can figure out with us, we can help you figure out from A to Z how to become a successful exporter, or how to grow your exports overseas. So we offer a number of different services to help you get there that I want to highlight here at the very end of at this call. The first of which we call pathfinding. Most companies, as they're just starting out or as they're thinking about expanding their markets, they're reacting to information they're getting from Amazon, other online sales data, client metrics. They're using that kind of data to figure out, okay, exactly where am I going to go next? Or it could be that you're relying on previous relationships. Maybe someone has spent some time in a country before, and because of that, there's some interest in exporting. The first valuable service World Trade Center can offer, we call pathfinding. And what it'll do is give you third-party data that'll validate what the opportunity looks like on the ground. It will help you identify key risks of doing business in markets all over the world. And it will help you understand what services are going to be required, including from the people here on this call, in order to successfully export to those markets. So that's pathfinding. It's a really great market research and selection service that we've provided for about 75 companies here this year in Utah alone. Really fantastic. But beyond that, you're going to need help building go-to-market strategies, validating your opportunities on the ground, actually matching with partners and government officials and others who you need to talk to ensure that the project is feasible and that you're going to have buyers when you make these investments. That's where our other services can be valuable. Between what we can do in-house and between the vast partner network that we've developed over the years, World Trade Center Utah can help you pull together those go-to-market strategies and can help you meet with the right people on the ground to validate the opportunity and to really execute on that go-to-market strategy that you build through our launch and our landing products. So I don't want to take up too much time. I see here that I've got about a minute left, but I just want to say that if any of you are interested in finding out more about how you can grow overseas, or how you can use this kind of capital to successfully grow your business in an international market, please reach out to me. My information will be included with the PowerPoint after this is done. And we'll have someone local on the ground who could come and meet with your company at any point. David, thank you for your time. And I look forward to talking with each of you on the call today.
All right. Excellent. Well, I think we'll call it a wrap on that. I know there have been several questions throughout that we've tried to address. Obviously, we've also shared contact information, so all of you have opportunities to ask questions to anyone who spoke today. And we will be sure to send out an email with all of the information that was presented today, as well as with contact information. And as Jim said, we'd love to hear from you if we can be of further help for you to grow your business internationally. Thank you very much. And you go to the WorldTradeCenterUtah.com website and join up to our newsletter if you want to stay better connected to World Trade Center Utah as well. All right. Thank you very much. Have a good day.